Hello, and welcome to the How to Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Hello and welcome to the How to Exit podcast. Today I'm here with Karl. Almost called you Kevin. Karl Hughes. I get you have the simplest name.
Wouldn't be the worst thing I've been called, you know?
I always mess up the simplest ones. I joke around and tell people at times, like when I first started this, if your name was John Smith, I'd butcher. I don't know if it was nerves or what.
Yeah.
But I'm here with Karl Hughes, and you are the founder and creator of Draft.dev, right? Which is was it software outsourcing or software? I'll let you tell us what it is here in a second. But
Sure.
thank you for being here today. And we always start kind of with the origin story. I think you and I have a little bit of a similar background in the fact we both came from venture-backed, the startup world, where you're working for companies that had huge cap tables and you're hoping to exit someday. But why don't you tell us kind of where you come from and how did you end up creating your own business?
Yeah, sure. So, yeah, thanks for having me, Ron. And I always love kind of rehashing this because it's been a long road. I started off studying mechanical engineering in college, and now I own two very niche marketing agencies with their own teams and like a totally different world 15, 20 years later. So, anyway, yeah, so started off in college studying engineering, ended up kind of getting a little bit like did some internships in mechanical engineering. It was really boring. So I kind of went to look for startups to work for, and I got into software engineering through that. Worked for a couple startups based here in Chicago. I got to join two as the very first engineer and then hire on a team around me. And so when you join a really early stage company like that, you get kind of elevated in your career, like to a point where you usually are not qualified, but that's the way they have to do it, right? They can't afford to hire actually qualified people. So they hire people like me who are hopefully going to grow into the role, and then they force us to do it. And then you learn how to do it by screwing up a lot. And so I was a very average software engineer, but a pretty savvy all-arounder, which is what early stage startups need. They need like people who kind of understand the business, kind of understand how to talk to a customer, kind of understand how to hire, kind of understand how to do engineering. And so really great experience just learning from the ground up with these founders who were going through the process of raising money, angel funds, and then Series A, getting to grow with companies from 0 to 30, 35 people. Just you get to see a big range of what the company looks like and how it's run, and getting to sit with the founders while they're doing calls and meetings with investors or customers, like all really great experiences to have. But I had never really figured out how to kind of start my own thing. And I had some little side projects, but they, for lots of reasons, never took off. And then what happened was COVID hit in 2020, and the last startup I was working for started to kind of hit the skids, just bad timing, and when they were going to raise money, and that market, and we were in the elementary education market, and that market was just crazy because nobody knew what schools were going to do when we have to all go remote, right? And so I started Draft.dev as a technical content marketing agency. So I'm going to get super in the, like, I'll just zoom into the weeds to tell you what it is, and then we'll kind of pull back out because
Okay.
we don't have to live down there. So essentially what I realized as a software engineer, there were all these companies that would reach out to me asking me to write blog posts for them. Super weird thing. But when you think about it, if you're a company that wants to sell a product to a software developer, you have to have a really authentic voice writing you your marketing content. You can't just hire a freelance writer to write about like deploying Kubernetes to AWS. Like most people wouldn't understand half the words in that title, much less be able to actually speak to how to do this thing with any authority. So the way that these companies, these developer tools companies that are building software tools would approach it is to reach out to engineers like me and try to get them to write things. So as I got more and more of those requests over the years, I would say yes occasionally when I was interested. They'd pay me a few $100, but it was like kind of whatever. And then my job starts to shut down, and I've got to do something with my time. It's a great like way to make a little extra money and just learn new things remotely. So I start doing it more. And within 3 months, I had just so much work coming in, both from saying that I was going to do this and the existing inflow, that I was like, okay, I got to make a real business of this. Like, it just doesn't make sense not to. There's clearly a huge demand, and I understand enough about how to do it myself that I think I can also hire other people who can do it. And so that's kind of the genesis of Draft.dev. I've since gone on to buy another company and working on another acquisition this year. So lots of stuff since then in the last 4 years, but it grew really quickly. And so anyway, that's the backstory. And like, I'll let you take it from here, Ron, where you want to go.
Okay. So, sorry, I thought you guys were doing, like, software development, like, so it's
It's a
the
super
marketing.
niche thing. Like, I always joke about this, like, I go to family parties, I don't even try to explain what it does. It doesn't matter, like, it doesn't matter, right? It's a marketing agency. It's like the
Right.
the simplest thing. But then when people say, "Oh, well, could you help me market my plumbing business?" I'm like, "No, that's we don't. We only do marketing for this tiny little subset of the world." So, yeah, I've this is kind of a bigger picture thing. I have this thought that the days of the corner marketing agency that you go to downtown Chicago where I live and you go work with a big agency of record, like, I don't think those exist anymore. I don't think they exist for most small to medium sized businesses anymore. Now, what I think companies should be doing is finding marketing agencies that understand their niche really, really well, because marketing is all about building trust and having reputation and understanding the market really well and how to talk to people. So, anyway, long story short, like, Draft.dev is kind of like was my first little toehold in that of like super niche marketing, and it worked really well. I mean, grew from 0 to 2.5 million revenue in 2 years, and so it's just like a rocket ship once I kind of realized there's so much demand pent up for it.
Well, the cool thing is I happen to love this topic. My MBA is in marketing. I've owned a marketing agency. I told you before the show started, I had a real estate investment firm. The only reason I even had a real estate investment firm is I had a marketing agency, and one of my top clients was a real estate investment firm, and they bought us and brought us in house. Right. And it's
Yep.
talking about super niche. I love that. I was a super niche guy. I only worked with really small companies. I really liked real estate investors. The truth of the matter is I was still figuring some stuff out. Your MBA in marketing doesn't really do much for these small to medium businesses. You wouldn't think some of these little small industries you wouldn't think were super profitable, but they were. So I would take on like roofing
Yeah.
companies, real estate companies, hair salons. Those are the guys I would look around for, and I would help coach them and get their marketing done. Just because I know if they had stickiness, or they had big ticket items, or they had recurring, they're going to land a client, keep the client for a long time. We could help them.
Yep.
And then I got acquired
Yep.
in. So I love that whole niche, and I can tell you story after story of small marketing companies I wish I'd have bought because they just did really well in a very tight niche.
A lot of those spaces, what I find is that, like with software engineering, and speaking of my own experience, like the founders of these businesses are often very technical. They understand the technical stuff and technology stuff very well, and often they understand enough about the business stuff, but like they're not necessarily marketing and growth people. And so what's cool is you're taking their technical expertise and fueling the fire with actual, like, more sophisticated growth techniques that would apply to like more mainstream industries, but you're taking it into a little small world that is not as, for lack of a better word, not as sophisticated. Like, they're just not doing all the core stuff that you have to do to market a business. And so it almost makes it easy. Like, I don't want to undersell what we do. I do think that there's a lot of value the team adds, and we've learned a lot of things that people would have a hard time replicating. But at the same time, like, yeah, by cutting down your market, it counterintuitively makes you much more valuable to the smaller market that you can serve.
I can see that because you really understand what the clients need, right? Because you're so laser focused, right? I do some growth consulting where I help businesses grow through acquisition. And one of the clients I have right now is buying small manufacturing companies. They're not online. It's, like, I'm really good at automating
Yeah.
stuff and doing anything on the online stuff and finding and generating leads from landing pages and on all online stuff. But these small manufacturing companies, they're 60, 70-year-old owners, don't hang out on Facebook, Twitter, or LinkedIn that much. They're out in the shop, making stuff, or they're making sales calls. That said, I love the idea of really honing in, and I think you're right. For the big guys, the agent of record is probably still gonna be stuff, and those guys are parsing a lot of that work out to people like you too. Even these big,
Right.
agencies of record
Right.
are, like, finding people like you that can really understand those niches and understand what the customer in marketing, the real concept you have to get is what's the story already going on in the customer's head, and how do you join that
Yep.
story and contribute content to it and help them move their game ahead? Once you do that, you build trust and rapport, and now you've got, if you offer enough help for them to grow and move forward, then you have that trust rapport, and you can actually make an offer to sell them something too. So, talk about the early stages. You were just doing this yourself. You realized you could bring some people on. In my background, I've always learned that not everybody I hire on does things exactly the way I do. So, how fast did you have to
Absolutely.
put in some like guides and standard operating procedures, or were
Yeah,
you
yeah.
able truly to hire somebody that could do it as well or better than you?
Yeah, that's a good question. Yeah, my experience too with hiring is that when you first hire somebody, they're going to do it maybe half as well as you for the first 6 months, and then
Mhm.
hopefully they get to 80% as well as you in the next 6 months, and then hopefully they exceed you after a year. That's just kind of like a rough rule
Yeah.
of thumb for me. And but the challenge most founders have is that they are unwilling to take that dip in productivity and profit while they hire somebody and get them ramped up, right? And I didn't think that way because I had been with these venture funded startups that's the whole model is like raise money, go hire, over hire almost beyond what your revenue can really sustain to hopefully get through that dip. And so I didn't have raised money from the outside, but I was still taking the same approach of I got customers to pay upfront as much as possible. So we had cash flow coming in. And then it's like, okay, go hire people to execute on that stuff. And hopefully we can overcome the dip in productivity and cash before this kind of the money runs out. And so far, I mean, that worked. The way I did it, the way I prioritize hiring back then and even now is I track my time pretty religiously, and I look at what are the things I'm doing that could be done by somebody else, even if it's not easy to outsource. Like, what are the things that could be done by somebody else and take a lot of my time? And then I also look at like what things take the energy from me, like are just hard for me to sustain. Like, there's detail work. Like a lot of entrepreneurs, I struggle with things like editing. Like I'm not an editor. I'm a writer type. So I want to like just get the first draft out there and then never see that thing again. Whereas other people are great at detail. So one of the first hires I made was an editor, somebody I had worked with before and knew was good. That's another thing I've noticed from myself and other entrepreneurs. A lot of your first hires and my first hires were people I knew. And that was kind of like, I would come to them and ask them for advice. I'd be like, hey, love to hire an editor. I know you're really good at editing. Would love to talk to you about it. And I'd ask them and then slowly turn it into like a, would you maybe want to work with me kind of thing? Is my backdoor hiring technique. I've used it several times. And so my employees all joke about it because whenever I'm hiring, they're like, okay, who are you going to trick into this today, Karl? But I do think that was a lot of how we made some good hires early on that were people who were pretty high quality and wouldn't have been able to get just from a random application. That said, I mean, there's a lot of roles where I had to get random applications and they've been great people too. So yeah, that was hiring. Definitely takes a bit of discipline to get over that pain of like they're not going to do it that well. But in the end, as a business owner, I really knew that I needed to be working on the like high leverage tasks that can't be replicated by employees easily. And that's things like strategy. At first it was customer calls. Eventually that I passed off as well. But yeah, that was kind of my process.
I'm a big fan of the EOS model and what they say. They break us down into two groups, right? The visionary and the integrator. And
Right.
that said, I've been in groups where I'm on, a member of another company, or we're doing a roll up or something. And I tell them, so look, I'm going to bring on an assistant. I always hire assistants. And like, cool,
Hmm.
what's it, give us a job description. And I was like, fine, do stuff. And I didn't use the word stuff, do stuff Ron doesn't want to do. And that was
Right.
line one of the job description. The second line of the job description was find stuff Ron's doing that you could do better and take it from him. And let me solve unique problems. That's what I'm really good at.
Yeah.
And a lot of entrepreneurs are that way. We're really good at solving the unique problems, but we're really not doing the repetitive task over and over again. And those are
Yeah.
your operators. Those you need one of those people around. Every company I've ever seen that really succeeds well, I can identify who's the visionary and who's the operator, who's the person that just reins in the visionary a little bit and
Yep.
keeps the gears turning. The best making money making companies out there aren't the big complex ones. They're the simple ones where they have a product, they churn out and they do it over and over and over again. And while I like money, that sounds so boring to me.
Right. Right. Right.
Right?
Right.
So I have to,
Totally.
I always have to hunt down somebody who's the operator, who's gonna make sure that we show up every week.
And now, yeah, I make this analogy that ever since I was managing software engineers, there's kind of two types of engineers. I think there's broadly two types of people here. One is the pioneer. That's the person that goes out there and lays the first groundwork, plows the first fields, picks the good land, like that stuff. But then when they get a couple years in, they're like, okay, I'm ready to move on. Like, where's the next field to go find? Like, what am I going to do next? And then you bring in the farmer who just continually cultivates that thing and makes it 10% better every year, 5% better every year. It's a marginal improvement. But there's people who love doing that. So for guys like us, Ron, it's like, well, I always struggle with like, does somebody really want to do that? Does somebody really want to go in here and plow this field every year, year over year? But yeah, there are people who love that kind of shit. But yeah, it's not my game either. I have a really hard time, like a lot of like we're talking about, with just doing the same thing over and over again, repetitive tasks. As soon as I've done it 3 times, I'm like, okay, how do I get out of here? This is, I get it. I've seen it. I learned 80% of it. Now let's move on.
Yeah. So
Yeah.
I'm a big believer in what you're doing. Focus. I think the biggest catalyst for me was the book. It was the book. I think I have it sitting around here somewhere called "Who Not How" by Dan Sullivan.
That's a good one.
Anytime I
Yep.
see him, I'm like, how am I going to figure this out? It's like, what am I doing? Just go find somebody that's already done it, right? You don't
Yep.
need to figure
Yep.
everything out. There is somebody out there who's done it a couple times, loves doing it, and
Right.
usually, if you really look, there's probably somebody that loves doing it would do it way better than you and fairly
Yeah.
reasonably priced if you
Yeah.
really deep dive into it. There's gonna be the guy out there who's the best at it and charge you 10 times what you probably should pay for it too.
Yeah, the E-Myth Revisited is one that got me on that train of like,
Mhm,
your whole job as an entrepreneur is build the template and then get out of the way and let other people execute it.
mhm.
But it's like, you're really, I think what a lot of people struggling to get started miss is like, your real job is build the cash flow so that, first job is build the cash flow so that you can actually hire those people to do the things. You can't outsource and you don't have any money coming in, and you can't like build everything yourself and magically get money. So like, figure out how you're going to get money. That's first number, like order number one, and then everything else is like, that's the task you got to delegate. But yeah,
I tend to
once you
delegate before the cash shows up.
right. Well,
It's
I
like,
mean, if you
"Okay,
can wheel and deal.
I'm gonna put some money into this thing and,
Sure, yeah.
yeah,
Yeah, if you got your own cash, that's a
yeah,
different, right? I mean, either way, it's like you're funding it somehow, or you're
yeah,
funding it off of goodwill that you're gonna hopefully give somebody some equity later or whatever. But
yeah.
yeah. Uh,
Done that too. I've done that too.
yeah.
It all depends on the project.
Uh-huh.
So cool. How what was the first indication that you could buy other companies and grow this, right?
Well, I had been around Kellogg, the MBA program at Northwestern here in
Mm,
Chicago. I do a guest lecture out there every quarter or whatever for their new venture discovery class, so like an entrepreneurship kind of class. And so I got to meet a lot of people doing that track.
mm,
And one of the things that I came up a couple times was this entrepreneurship through acquisition, which is like a whole thing that MBAs do. And I'm going to speak to, yeah, I'm not an MBA. I didn't go to, I mean, I finished undergrad, but it took me 6.5 years. I'm not an academic type. Like, I struggle with school. So, but like what I learned from them was there's this whole track of people who go out there, finish an MBA program, and then go buy small businesses. Usually these are businesses with 1 to 3 million, maybe 5 million in EBITDA that they are going to then go run. So they want to come in and manage a team and like have a little more of an established business. And what I realized in that is like, man, that's such a great idea because it lets you skip that whole like, who's our customer? How much do we charge? What's our product? What's our service? Like, that whole part is so hard. And
mm,
it's not that I don't like some pieces of it, but it takes a long time and you go down a lot of false like starts before you get it right. Right. And that's just a natural part of entrepreneurship. And I was thinking like, okay, if I want to like grow this company and just grow what we're doing, there's two options. I can either try to self-fund little ventures that maybe spin off and do big things or do other things, but that could take 5 or 10 years before I actually hit one of these, in the right track. Or I just put the cash together to go buy a company that already has figured all that out. And then maybe I can take some of my operational experience and grow that thing on my own. So I got together with a longtime friend and now business partner, and we learned about the SBA program for doing this. And there's a whole way you can do this with debt, so you don't even have to put much money down. And we went through that process similar to like Draft.dev. We were looking for a niche business, so we looked for a company that works with a specific market and has a very specific offering. And so we bought a podcast production company that mostly works with financial advisors. Good niche in that they've got money, they have interest in growth, they have like, podcasting is a good channel for them, and it's a good high trust way for them to build an audience. And then podcast production, I didn't know anything about audio video production, so I was like, well, great, let's buy a team that knows how to do that. And so the team came along with that. Yeah, really good experience. I mean, you learn a ton buying a business because you have to look at the company in a different way than when you're running it day to day. But I will say that having that operator's lens does help a lot, and it definitely, like, I think it's an unfair advantage versus the more financial buyers who out there buying businesses, just because a lot of times they look at businesses only spreadsheets, and that can be kind of a blind spot if you're not also keeping an eye on what's the actual day-to-day like, and what's the actual customer behavior and team behavior like. So anyway, that lots of stuff we could dive into there, because it was a really fun experience, and looking to do it again this year. So like kind of in, just pre-LOI with 3 or 4 companies at the moment.
So, do you mind me asking which podcast production company you bought?
Yeah. So we're called The Podcast Consultant, thepodcastconsultant.com. We got about 80 clients. Again, pretty heavily concentrated in the financial services space. So there's some investment funds, as well as money managers, and a little bit in real estate and things like that too. But yeah, these, typically they're high trust businesses where they don't need a massive audience. They're not going to make the next Joe Rogan show, but they want to build like a really solid monthly or weekly cadence where they're in people's ears. Podcasting, as you know, Ron, works
Right.
well for that.
As the reason I asked is most podcasters are broke, right? So,
Yeah.
I've looked at buying podcast production companies. The one I actually looked at was when we were the closest was what did exactly what you were talking about. That's the reason I was asking which one you bought, because I didn't know if they sold or not.
Yep.
I was like, we might have looked at the same one. The,
I'm sure we've seen some of the same stuff then.
yeah.
Yeah, because I looked at like 100 2 years ago when we were starting that process. Yep.
The, the brilliant thing that they were doing, and I don't know how you guys are set up, but what they would do is reach out to financial advisors, people who have a platform, people who have written books,
Yep.
they have a reason to get out there. And I'll tell you, that's the easiest way I grew the show. Everybody's like, how did you get all these famous people on your show? Because I've had all the top authors. I was like, anybody that has ever written a book the traditional way, not just self-published. They've hired a publishing or a PR company or a company to help them promote the book. And those guys are telling them to get on everything they can and talk about their book. So it was a real easy land for most of those. Hey, you want to come on a podcast and talk about your book? It's bidding people to be on the show it's never been difficult for me. The production quality, I have, a team that does it, and I probably could do a lot better. So I was looking in the same space. What the cool thing with these guys did is they would go out and hunt these guys down, these financial advisors and stuff, and then they would hire voice talent, and the voice talent
Mm,
would be the co-host. So they had this
that's cool.
professional voice talent, like a
Yeah.
really high production, and they did all the pre and post production. So
Yeah.
all
That's
the
a good idea.
expert had to do is show up and be the expert, right?
Yeah.
But the, voice talent was somebody who was really good at asking questions and filling in the gap. I've often thought about bringing on a co-host and stuff because a lot of the shows you see have 2 and they play off of each other, and it works really well that way. I just have a hard time finding anybody willing to work as hard as I do. I crank out 2 shows a week. 2 one-hour shows a week.
That's tough cadence. Not many shows get to that. I mean,
Yeah,
and especially people like us, Ron, who are like busy entrepreneurs with
yeah.
like companies that we're working on. It's really hard to prioritize. But you're hitting on something there. There's a lot of advantages to having a co-host. I love that idea of like a paid co-host. Is
Mhm.
like maybe that's the angle that a lot of shows should take, because it takes the pressure off of you to always have to be there and prepped and 100% ready.
Mhm.
Whereas, like, if you can kind of just slide in as like the color commentator and let the host kind of drive the conversation, that might actually be a lot easier for you. But yeah,
I just didn't know if you had looked at any of that, but yeah, those guys
yeah,
they were doing pretty good. The one that I looked at, we were doing, I wanna say I won't say the name of the company, so I can't see the
yeah.
revenue because we were under NDA because we were looking at buying them. They were doing 7.5, $8 million a year in revenue,
Wow,
and
nice,
they had a little bit of overhead because they paid all those, stuff.
right?
So a lot of podcasts and a lot of stuff have very high profit margins. They were more down towards the standard great business. Like, I think they're running
Yeah,
25 to 27% profit margin, which is, great for most businesses. For
yeah.
podcast production, usually it's kinda like newsletters and other stuff, you can get them really high. It's one of the few industries where it's not unheard of to see here a 50 or 60 or 70% profit margin.
And I think it's also like, again, the more you can niche down and differentiate, it becomes less of a war of who's the cheapest. Like, you mentioned this, like podcasters don't have a lot of money. You're right. Like, if you look at let's say there's a million podcasts, 900,000 of them have no money, but there's some 10% of them that through their business make a lot of money. And that's the ones you want to go for, because they look at this as an investment. Whereas the rest of them are looking at it as a cost center only.
Mm,
So I think that's part of it. And whereas most small agency owners think, I'll just take any customer who comes in the door. That way I can get as much revenue as I can. And in order to do that, they end up compromising on price, or they have to like meet wherever the market is, and that market just drives them lower and lower. Whereas again, you pick financial services, maybe tech, there's 5 or 6 other industries that are pretty high margin. I'm sure there's secret ones I don't know about. I met a guy, this is kind of a aside, but since we're on the topic of podcasts, I love telling this story. I met a guy, and I won't share his niche or podcast because that's his thing, but it's a loosely, in broad terms, an investment podcast, daily show. Every day he comments on what's happening in that little tiny world of investment. It's a very niche investment space. I didn't even know that was a thing that people pay attention to, right? He's talking about it every single day, spends an hour putting it together. He's got an assistant that does the quick post-production and not even a really full edit, just dumps it out there. Has paid subscribers plus free, plus a, like a weekly newsletter. And he gets 80 grand a month just running the show. Then him and an assistant, that's it. Like, so there are podcasts out there that do make a shitload of money. And
That's really
you
good.
know,
I need to talk to this guy and figure out what I'm
I
doing
know,
wrong.
right? But again, super niche. And he has this, I mean, it's a hard business to run. He has no way to take a day off unless he's, I mean, it is tough, but he loves it. I mean,
Yeah.
honestly, it's a world that he is in every day anyway. So he wouldn't have it any other way, I don't think. But man, there's space out there, but you can't just go, I'm going to make a comedy podcast with my 2 best friends because we're all so funny. Like, that's just not, you're not that funny.
That said,
Yep.
the reason I can pull off the podcast, and I'd be willing to show you this sometime because you have a production company, is I have an assembly line. I
Yeah.
use a
Yeah.
Asana. It's a Scrum board if you're used to
Mm-hmm.
the programming thing, and all I do is literally drop like I'm looking at a picture of you right now. When I'm done, I drop it over to the next Scrum board thing that says edit, and I've automated it. It actually reassigns it to the person that edits
Yeah.
it, and she
Nice.
takes it from
Yeah.
there, and when she drops it over to the next one, it'll be promote, and that'll
Yeah.
it assigns it to that, the marketing manager, and I do 2 things. No, as I say, I show up on the mic, and then
Yeah.
I suggest people, "Hey, check out this guy. I think I want him on the show. Can you reach out and put him on the show?" Other than that, they do it all.
I think that's the way to do it, Ron. Like, there's so many of the shows that we help launch and start. And this is, I've owned this company for a year now. So I'm still pretty early, but I've kind of seen, probably 30, 40 launches.
Mhm.
And so many just lose steam after 5 or 6 episodes. And it's because of that. They don't really have a workflow, and they struggle with who owns each piece of the process and like how's the handoff happen.
Mm.
And that just adds up over time. You're trying to do a show every week or even every 2 weeks. And it's like, the mental energy required to think, okay, where does this go next? What happens next? And then who takes it? Like, it builds up. I mean, I would love to, this is long-term stuff, but it'd be cool to develop more of like full comprehensive management services. This business, when we bought it, it's very contained to just the post-production and editing. And we've been kind of slowly looking at what other areas do we want to start touching on, right? Like, is placing hosts a really good high value thing we could add on? Or is getting our hosts like a stream of guests, is that really valuable? We're trying to figure that out.
Yeah.
But I do think, that's one of the other things I've noticed in both businesses. They're super small in their scope of work, but that's kind of a good thing because it makes it very clear when somebody is or isn't a fit based on, these are the 3 things we do. If it fits in one of these boxes, we'll do it. Otherwise we say no. And a lot of entrepreneurs think that's crazy because you're like, well, you're saying no to good revenue people that want to spend money with you. But like, you're early on, like, don't try to chase a million squirrels, as we're saying. Like, you got to be focused because it's too easy to dilute your brand and to get like lost chasing things that are low margin. So we're super intentional and limited in scope, but I think it is a strength. You just have to like be disciplined in that approach of like adding one thing at a time and being careful with it. But anyway, totally aside here.
The one I was looking at, I'm pretty sure it was full production, meaning they had the voice talent. They did
Right.
pre-production, meaning if
Yep.
they're gonna interview people, they go help find those guys, and then they do post-production, and they, do marketing and do some of the social media marketing and breakup of that. But they charged, I wanna say it was $25,000 a year that was one of their packages, right? And
Yep.
it wasn't their biggest package, right? That was just
Yep.
podcast, no other like, the post-production marketing and shorts and all the other stuff was an add-on.
But think about those financial advisors, 2 clients as worth way more than 25 grand a year, like depending on the size of your client and all that stuff. So it's
Definitely,
pretty easy for them to make the ROI on it.
so there's other ways that these things can be turned into, you've got a writing company, that might be something cool you could look at too, is how do you turn all the podcasts into written content for the people who don't have time to listen to, like I produce 2 hours of content a week. Listeners going, I just can't catch up, right? It's like, cool, I've written really detailed articles on every show. It has
Right.
key takeaways, it has an executive summary, and it has like a 500 to 1,500 word article that encompasses what we talk about. So if you
Yeah,
don't
yeah.
have time to listen to us, then read it. Read that, and then you'll know right just from reading, like, "I gotta go back and watch that one. That's gonna make a difference in my life," or, "I'm not ready for that one anyway, but it was cool to read it."
I think a lot of people are afraid of saying the same thing in multiple places, and that's kind of a mistake of, like, entrepreneurs trying to do their own PR or marketing or whatever it is. It's just, like, the truth is, like, nobody is watching Ron or me so closely that they know, "Oh, Carl, you just posted a blog post on that thing you already did a podcast on? You already posted on LinkedIn about it? Like, what's up with that?" Nobody says that. Nobody ever
Yeah.
notices. I have this whole system on LinkedIn of, like, I pre-write all my content for a year ahead of time. So stuff recirculates through there, and it's about 52 weeks of content, so I'll write it all, but I edit it every year, so at least it's kind of fresh. But in general, it's the same kind of shit. I mean, I'm saying the same thing for 3 years or whatever. But people all the time are like, "That was such a great post you just made," and I'm like, I don't even know what it was, A, but B, it was something I wrote 3 years ago, and I've just been kind of tweaking it every year to make sure it stays like in the algorithm. It's just like, this stuff is, there's nothing wrong with saying the same thing over and over again, because people aren't watching you that closely, is my point. And, like, honestly, most successful people on social media, they got like two or three sort of pillar things that they talk about, and they just hit it over and over and over again. So nothing wrong with that.
So that's that. The other one, have you looked at, like, I looked recently at a podcast placement service, which is they bring on mostly what you're talking about, advisors and coaches and stuff, people who make good money in what they do, and they get them placed on podcasts. And some of these places, they charge 18 to $20,000 a year. We looked at a we looked at one to buy it, and unfortunately,
Yep.
they made a bunch of changes in their business in the last 12 to 18 months. So they were declining in revenue because those
Yeah.
changes haven't settled in and started to move the other direction. They were confident they were going to, but they hadn't. In that space, if you look at a lot of spaces like this, there's no barrier to entry. Almost
Yeah.
anybody
That's right.
can start this company. So you have a bigger threshold of, like, increasing competitors and decreasing revenue. So I couldn't go into that space. I couldn't fix something. I don't jump into spaces where I have to fix something in industry I don't know.
No. Buying agencies and service businesses, one of the things that I'm super aware of is, if they don't have recurring revenue baked in, then it needs to have a deal flow, like a channel that is actually working, that is not just referrals and I know the founder. If you're going to buy it, I mean, like, otherwise it doesn't, what are you buying? Like, we looked at an agency earlier this year that's got a very small number of clients that are very high dollar clients, and they're good clients from like a great name recognition, but the work they do is kind of like usually 3 to 9 month projects, so it's not recurring. It's going to be just every now and then they bring it in, and they have no channels of deal flow other than the founder's reputation. So if I buy that thing, what I gotta, like, completely restart like the inbound channels to get something going, or I got to build them from scratch. And that's a ton of work. I mean, that's like honestly one of the hardest things. I might as well start the company from scratch at that point. I think you're right. Like, you looking at those podcast guest placement services, if their only channels are very like I actually looked at one earlier this year too, and their only channel was outbound email. And outbound email is tough for service businesses, especially as Google cracks down on it. LinkedIn will crack down on it. It's just like one of those channels where you don't own the relationship. You don't own it. Doesn't snowball over time. It just takes continual input. And so, organic search, like, way more attractive to me, because it's way harder to change those if they have a really solid base of SEO based stuff, or if they have some kind of interesting partnership channels where they're bringing in people from these channels that it's hard to replicate those relationships. Maybe that's valuable. But yeah, I agree. That's something you got to watch for in, like, buying companies, like service businesses, because so many of them are just very referral driven, and it's very hard to replicate that.
And I get a lot of my guests from those placement services, right? I
Sure.
never half the time I don't know because I have, like I
Yeah.
said, I have people who help me find people. So if they manage to find my email address and
Yeah.
send me their speaker bio, I'll look at it. And then I just usually, if I say yes, I just send it over to my pre-production and editing team and say, hey, work with this person, get them on the show. But I would say probably a third or more are way so far off that, like, they didn't even look to see what my show
Yeah.
is before they sent me the profile.
I get a lot of those too. And
Yeah.
I don't actually have a podcast. This is what's funny. They're actually so far off base. They just see that I run the podcast consultant. So I either must have a podcast or have access to podcasts, which,
Yeah.
again, we don't place guests on our our clients' shows at this point. And so I get these outreaches too. And I'm like, what show are you trying to reach here? And maybe like, if you're genuinely trying to look for some help, maybe I can give it. But honestly, I don't think you're trying that hard.
What makes a great service company that you would be interested in? Give me your kind of
Yeah.
in the ETA terms, what's your buyer's box? Like, what are you looking
Yeah.
for? What's the magic sauce of if a company had X, Y, and Z, you want to talk to them?
Yeah. So we're trying to stay below the radar from private equity for a couple of reasons. So I'll kind of assuming that listeners don't know a ton about the space of buying companies. There's a few tiers of who buys companies. Let's call it the top end. There's going to be like big public companies buy small competitors to add revenue, which basically improves their multiples that they trade their stock at, or stuff like that. Then there's like private equity, which can range for anywhere. I mean, Ron, like they go small as maybe 10 or $20 million companies and as big as hundreds of millions of dollar companies. Private equity has blown up in the last 30 years as far as like the kinds of private equity there is now. So
Mm.
it's not as it used to be just buying a bunch of distressed assets and rolling them up. Now it's a lot more complex. But anyway, so private equity though, their cutoff is almost never below 10, 20 million in revenue and total value. And then you get below that, the search fund people hitting like maybe the again $3 to $10 million companies, and then below that there's the people like me. So in a way, what's interesting is this is the Wild West down here at sub 3 or sub $5 million companies, because very few buyers are out there, professional buyers. A lot of the people that sell their companies in this tiny size, they either sell to a competitor who's like similarly sized or a little bigger, or they just never exit it. They kind of just wind the company down or sell it to an employee maybe, or hand it off to a family member. So the interesting thing about these kind of really small businesses, they're often not looking to sell. There are some brokers that work in this size, but it's fewer than at the bigger sizes where you work with investment banks and real brokers and stuff. So few brokers, a lot of just proprietary deals, a lot of very unsophisticated finances. But to answer your question, in short, what we're looking for are opportunities to take companies from, say, 1 to 3 million in revenue to 5 to 10 over the next few years, both through like some acquisitions that will be rolled up together, as well as some that are going to be just kind of independent and organically grown. So looking for founders who are typically going to be subject matter experts, like the guy who bought the podcast production company, great podcast producer, worked at the Wall Street Journal, had a ton of contacts from that, and that's where his clients came from. But he's not a business guy. He wasn't a sales guy. He never set up a CRM, never hired a team of salespeople. Like he just, he did the thing, right? He likes the work. So he kind of hit the limit of where he's going to grow that company. And so we figure we can take the bones there, which are pretty good, got a good production team in place, got some existing clients, and scale that up. So start to add in real organic marketing and outbound and partnerships, all that stuff that we'll do to kind of grow the business and hire a salesperson, all that stuff. So that's the opportunities we're looking for, are businesses that have figured out the service delivery at the scale that they're at and are kind of like bottlenecked by the founder or the sort of founder's willingness to go to the next level. Again, it's not that the founder couldn't, it's that they just don't want to do that, right? Like being a CEO of a business that has 10, 20, 30 employees is way different than going from 0 to 1, where you're just starting and kind of getting your first few employees and figuring it out. You can't think like that operator who's down in the weeds. You got to move a level up, and some people just don't want to do that. So that's the kinds of things we're looking at. Very productized, ideally, where they have a really good input and output that's like, show comes in from us, we know what the monthly and weekly delivery cadence is going to look like. Very like, the packages are very like easy to explain and sell, not something that's super strategic as far as like the founder is like offering this bespoke strategy to each client. That's not really a good replicable business. And then has a team, but not like a super I guess like has a team, but they may not be like managers yet. It might just be a lot of executors, hands-on people. So just broadly, that's kind of where we've looked. We've got some like sort of harder criteria as well. You got to have you got to know enough of your numbers to get us like top line revenue, SDE, and you got to be aware of your ad backs if you're going to try to do any. A lot of it though, Ron, I've noticed, is educating the sellers. Because again, not to knock people who own small businesses. My dad is a small business owner that owned like a way sub $1 million business. I am a small business owner. I'm not anything special. I didn't know about this stuff till 2 years ago. But like, you got to explain to them like what's the difference between EBITDA, SDE, net profit, gross margin, net margin, like all that stuff. They may never have looked at their books in that way. They just care, do they have cash in the bank every month? And so we go through a lot of education trying to help them understand what the numbers we're looking for are, because we're going to send those to the bank as we do if we do debt, or to investors if we're raising money or whatever.
All right. So I'm always curious you're doing off market mostly, or are you doing like brokers and stuff?
Yeah,
So,
I do talk to brokers. I haven't, I mean, the last company we bought was off market, and most of them we're talking to now are off market. We've been mostly looking at direct competitors that would be like add-ons. And so once when you're building a platform, as
mm,
they say in private equity, you start with some kind of core company, and then the foundation, and then you start building a platform around it by adding on companies. So with add-ons, basically it's like the way we look at that is, let's go to the 50 to 100 closest competitors and see if there's somebody who wants to exit. And the challenge there is that they're not really ready. They haven't thought about this usually until you tap them, and then they're like, oh, maybe let's talk about it. And so the timeline between like first call and sale is probably longer. But brokers can get into things messy too. I have a lot of stories about that because I've looked at several brokered deals in the last couple of years, and I don't think they're always productive. I think they do serve a purpose, and I understand. And sometimes they get you great numbers, and it's nice and easy to understand everything. I love that. But man, sometimes they tell sellers things that are just not going to happen, and they get expectations all fucked up, and it's just really hard to come back from that sometimes. So anyway,
and to give credit where credit's due, most of them aren't licensed. There's only 2 or 3 states that actually require anything formal makes sense. There's a lot of states that require something, like California, you gotta be a broker, but you have to be a commercial real estate broker, and I don't know what they're thinking because it has nothing to do.
yeah,
Occasionally,
nothing to do.
a lot of business have commercial real estate attached, but
Right.
they're told I don't know how many times I've looked at something since I moved here to California. I have a buddy who's thinking he might go into this space and buy something. So I've been looking at things that him and I could do together. And when I reach out to them, if it's listed, the broker sends me real estate related info, the crime rate in the area and all this stuff that looks like if I was going to buy a house and move there. And I was like, this
Right.
has nothing to do with the stuff I need to know to whether or not this company can support buying
Yeah.
it. That said, if you go I do a lot of off-market outreach too, and I agree with you. You become kind of the broker. If you're talking to anybody that's off market, you have to build such
Yes.
rapport with them
Yeah.
because you're now having to educate them on the process. You might even
Yep.
have to educate them what the seller's discretionary
Yep.
earnings is or EBITDA
Yep.
is. You might have to understand. I don't know how many times where I've had business owners that at first go, "I'm not giving you my tax returns." Like, look, if you take this to any broker, if you do anything else, this is a
Yep.
standard part of this, right? So one of the
Right.
ways we can validate what you show me in QuickBooks is, you can. I'm pretty brutal with some people. It's like, look, you can say anything you want in your QuickBooks, but I'm trusting you probably didn't lie to the IRS. So the reason we look at the tax records is to take a look and see do they align at all.
Yeah, I agree. You do have to build up a lot of trust with the seller, which again, I don't think it's bad,
No,
because at the end of the day, like your lawyers are going to do paperwork, their lawyers are going to do paperwork, but nobody wants to freaking go to court, right? Like that,
right.
if you buy a company and then you have to go fight in court about whether it's like a non-compete or like poaching customers, employees, or you have to go fight about like which revenue or what accounts receivable you should have gotten versus shouldn't, man, that's a brutal slog, and you're probably not even going to make enough money to make it worth it, especially with these small acquisitions. Like, I want to go into this with the seller and say, like, look, you want to move on, do something else. Great. I want to give you enough cash to go do that. I'm going to value your business fairly. I'm going to tell you on meeting one how we typically value these kind of small businesses. And I'm going to tell you what things that, are going to be red flags and not. And if you want to move forward, let's do it. Like, let's build trust. Let's figure out how to make you feel comfortable with it. But I don't want to like feel like I pulled one over on you and then we hate each other in 3 months. Like, that's not going to be productive, because we're going to have to work on this handoff. Like, there's no way out instantly. It just doesn't happen.
And I tell people all the time, so unless you're 70 something, there's a pretty good chance you may not know it yet, but you're a serial entrepreneur. And when we get done here, you're gonna go out most of these guys, if you're gonna do something else, and it's gonna be pretty cool, and you're gonna build it up pretty good size, and you're gonna get it to your next roadblock. It might be a little higher than this one because you learned some lessons. But when you're ready to sell that one, I want you to remember me and call me because I'll probably be ready to buy it too. I like what you
Yeah.
created here. And I've tell
Yeah.
people that all the time if they're not 70, 80. when they're talking to me. It's like, "Look, I'm gonna do everything I can to make friends with you through this process and make sure that we see eye to eye and we respect each other." And it's because even if I'm not your buyer right now, because of my show and everything, I know so many different people. I probably know somebody that would be interested in buying it.
Right.
But other
Right.
than that, even if I'm not the buyer right now, I want you to think of me again when you sell the next one, right? Because I plan on doing this for a while. I'll
Yep.
probably be interested 5 years down the road when you hit the same position with your next company. And they get it, they understand. But the only reason I wanted to bring that up is a lot of listeners are out there, they're talking to off market deals, and then they get frustrated because the guy doesn't want to give them all their financials on call three, right? It's a
Right.
different process. Report comes
Yep.
first. I don't even ask about numbers if they're not listed. I don't ask about numbers until I
Yeah.
really truly know them, what they built, why they built it. That's the stories I start with. Tell me what you built, and how did you build
Yeah.
that? Why did you build that?
And
Uh,
understanding, like, their priorities, like, even if they whether they sell or not, just like, why do you run the company the way you do? Like, is it because you love the people you work with and they're like your second family you've created? Is it because you love your customers and your market so much? And you gotta, and this is where it's helpful to be people like us, Ron, buying companies, is we are business operators. We've been in that seat that they've
mm,
been in, right? Where like we know what that CEO of a small company, what their day to day looks like, and the things they think about. And so like it's a lot easier to connect with people, I think, when you're in our shoes than if you come in there with suit and tie and you're like the Wall Street finance type. Again, not to knock those guys. There's plenty of good ones who are great, honest people. Plenty of search funders who are great, honest people and going to be good at running businesses. But like, there's a certain level of connection you get when you're just an average looking Joe. You kind of talk their language. That we get to use that, right?
let's cover a couple of basics. So, if somebody can only think of 2 or 3 things at the end of the show, what would you want them to walk away with? What are the takeaways you'd want somebody who's listening to walk away having listened to you and I for the last hour?
Yeah, don't be afraid to reinvent your career like 100 times. I think that's one of the most fun parts about once you slip into entrepreneurship is like you can kind of be whoever you want to be. You want to run one company forever, great, you can do that. You want to run 10 companies, figure out how to buy a bunch of companies, you can do that. If you want to sell and then go be an employee at a bigger company, you can do that. Like there's just no the optionality becomes limitless. We kind of talked about that beforehand too. The lifestyle optionality is also really exciting and interesting. You want to go live out in the woods in a tiny home, you can do that. You don't get a lot of corporate jobs where that's like a great option, even with the more remote work. That's one, is just not being afraid to reinvent yourself. And then the other part, and this kind of goes to what we talked about with building trust with sellers, is like the biggest thing that's been helpful to me in my personal career has been intentionally maintaining a network, not just building a network. So what I mean is it's not about size and like having 500,000 LinkedIn connections. It's about who are the 50 to 100 people I actually keep up with on an annual basis. And are they valuable? And are we getting good vibes from each other and giving each other value? Because it's never, you can't have a good network. It's a one-way street where you're just constantly asking for stuff or just constantly giving. It's got to be both ways. But that's been one of the most valuable things in my career that I intentionally spend a lot of time on investing and just maintaining. And yet there's no direct known ROI, right? There's no way I could like say, oh yeah, keeping up with Ron's going to make me $1 million someday. No idea. No idea what this relationship will be, Ron. But like, you seem like a solid guy. You've done a lot of things that I want to do someday. Like, would love to keep up with you. So you're like, it's the those kind of things, being able to actually maintain those relationships and having a system for keeping up with them has been so valuable to me. And I encourage everybody to, whatever that means for you in your career, go do that.
I agree, and I agree. There's always that saying that you are the 4 or 5 people you spend the most time with. I've literally had to stop spending time with people because they bring the wrong energy in the world. You'll live up to the expectations of the people you surround yourself to. So, it's always great too, and it's one of the reasons I hang out with a lot of acquisition entrepreneurs. Twice a month, we do a hangout where people like you'll be invited. Everybody that's ever been on the show will be invited. We post it on LinkedIn, we post it on all the different places, but it's a hangout for anybody in the space that's looking to grow through acquisition, or they're wanting to be an ETA guy, an entrepreneur through acquisition. But we have people who have done 20, 30, 40, 50 deals that show up on there. People who have We've had people who've been on the show who were advisors for the top PE firms forever, and now they have their own little firm, all the way down to just people who just got out of college and they have a search fund, or they're currently an employee, but they're trying to buy their boss out of their company. They're trying to figure it out. So, and we spend an hour and a half twice a month, and the whole goal is nobody leaves their stuck. So, you bring to the table where you're stuck, and then we have people who can give you ideas and brainstorm around and help you get unstuck. That's so valuable. It's kind of my own little YPO or whatever, what they call it, young, organization or young professional organization, whatever they call themselves. But it's more of along the lines of keeping yourself around like-minded people and keeping
Yeah.
those gears turning. And I learn stuff all the time. I learn stuff from interviewing guys like you. I learn stuff from hanging out with those people. There's things they're doing in their space and industry. And I'm thinking I should apply to what I do. So, how do people reach out to you? How do people reach you? What's the best way to
Yeah. Yeah, I'm Karl L. Hughes. Carl's with a K on most of the big platforms, Twitter, X, and LinkedIn. And my personal website is karllhughes.com. And all my contact info is there. So I'm always happy to talk via one of those channels or email. Love talking to other entrepreneurs at any stage. I mean, I'm only 4 years into this. Like, talk about I feel like a totally different person than I was 5, 6 years ago, from like what I think is possible and the kinds of people I get to talk to every day and the kinds of stuff I do every day. And so my goal is to always be encouraging. So I hope I can do that to some people listening. And if you want to reach out, I'd love to talk more.
Awesome. Well, thank you for being here today. We'll call that a show and hang out for just a second. I want to announce our new channel partners, the ITX Marketplace. Since 1998, ITX has created $5 billion in value by selling more than 225 IT businesses in 20 countries. ITX works exclusively with IT-enabled businesses generating between 5 million and 30 million who are ready to be sold, and M&A decision makers who are ready to buy. For over 25 years, ITX has developed industry knowledge that helps determine whether a seller is a good fit for their buyers before making the match. ITX Mergers and Acquisition Marketplace we have partnered with has a proprietary database of 50,000 plus global buyers seeking IT service firms, managed service providers, Microsoft service providers, software as a service platforms, and channel partners with Microsoft, Oracle, ServiceNow, and the Salesforce space. If you have an IT enabled business you're ready to sell, I want you to visit the itexchangenet.com/marketplace. How to exit. That link will be in the show notes. Visit them now.